Hello and welcome to the Friday market update. Okay, this is my passionate plea. Final call. Don't miss the train again. Everyone, you got to hear this. If you're still on the fence about buying a home, this could be honestly one of your last chances before the market shifts again. It is shifting. Mortgage rates dropped below 6.5% and are now sitting at 6.29% for conventional 30-year fixed prime borrower, according to Mortgage News Daily. And that means that FHA, VA rates are below 6% now. That's happening. That's psychological. That's happening. Home buyers still have leverage. Sellers are still giving out tens of thousands of dollars in incentives for home buyers to buy. But how long will this last? And I don't think it's going to last for long. This is that moment, the one that you'll look back on and either say, I'm so glad I bought, or why didn't I do it? Why did I not buy again? What was holding me back? You're only holding yourself back. So the hidden force behind keeping the rates too high, I want to show you how close we were to much lower rates and why that window is just starting to go down, and it's going to get wide open with interest rates dropping. For the past 2 years, the biggest roadblock to lower rates has been the BLS jobs report, the Bureau of Labor Statistics, the monthly numbers that Wall Street and the Fed rely on to decide if the economy is strong or weak. The problem is the numbers have been so far off, they've been wrong every single time. They come out inflated. The Fed gets excited. Wall Street gets excited that the economy is so good, so we better keep interest rates high. Then they get quietly revised months later. They have 2 to 3 revisions months after the fact, and they overstated the actual 2024 job growth by 2023 job growth by 1.25 million jobs. That's a 50% miss. The initial jobs reports came out and said it was 2.5 million jobs, and they missed it by 1.5 million or 1.25 million, 50% off. Now, just last month, in July, actually, they reported June numbers, and they reported June numbers at 147,000 jobs. That was a decent job number, and it was higher than expectations. Wall Street said, ooh, the economy is better than it was. But guess what? 2 revisions later, it turns out that 147,000 jobs actually lost 13,000 jobs. That's huge. It went from 147,000 jobs to a negative 13,000 jobs. So what ended up happening is the bogus data kept the mortgage rates higher than they should be. It made the Fed pause a rate cut at their July meeting. Wall Street was trading off these numbers thinking the economy is pretty darn good. But guess what? It really wasn't. So the numbers were terrible. So it pushed back buyers onto the sidelines, all based on bad information. But now the truth is out. Today was the BLS jobs report, and it came out actually lower than expected. And Wall Street has now moved to 100% chance of a Fed rate cut in September. Well, 99%, but I'm going with 100 because that's about as high as it can get. So possibly more than one rate cut, and maybe even a higher rate cut in the September 17th meeting. So when that happens, this calm market, man, you start to see this shift, and you're going to see more and more home buyers. It could bring rates down. It could start moving values up because more buyers come into the market. Now, another thing I want to point out, can you tell I'm passionate today? The number of existing home sales has been down over 1 million per year for the last 3 years. That's 3 million less existing home sales over the last 3 years than it is on average. So you tell me, is there any pent-up demand that will come out and play? The average first-time home buyer is 38 years old. Do you think they want a home? They're having kids. They're getting gray hair. This is the time that these people are going to start coming out because the rates have dropped. It feels more affordable, and this herd of cows is starting to come in. So what buyers will regret? Everyone wants to wait until the rates fall. But here's the truth. When rates fall, prices rise, and they can rise fast. And it is proven that when rates fall, prices rise. Very similar to what COVID happened. So, but now, right now, what's happening is sellers are practically begging buyers to just put in an offer, put in an offer, put in an offer. And they're tossing 10,000, 20,000, even $30,000 to help with closing costs or rate buy downs. They're also lowering sale prices. Almost all the sales that we have right now are coming in below appraised value. That's free money for buyers right now. But the moment the rates continue to drop, that money starts to shrink up and sellers will stop negotiating because there's going to be more buyers and they don't have to negotiate. They can keep the gains that they had over the years. Right now, they got a lot of gains that they can actually give up to the buyer because they're still going to make out when they sell the house. Now, multiple offers could return, prices can go up, and you're left chasing the market again. Don't let that happen. Jump in. Get the free money now. If you're waiting for rates to hit 5%, you could be paying $50,000 more for the same house with no help for the seller, meaning you have to come up with not only more money for the down payment, more money for closing costs. You're just going to be chasing your tail round and round. So how much will lower rate help you? Probably around $350 per month if it dropped 1% on a $500,000 mortgage. But if you're paying an extra $50,000, which could potentially happen, that could take you over 12 years just to make up that savings by paying $50,000. You don't need to pay $50,000 right now. You can actually get that rate today and lower it through a refinance and then actually save the money then. Don't pay $50,000 if you don't have to. Now, I want to tell you a little story. So Robert Condell, great friend of mine, was he crazy or was he brilliant? So he's a good friend of mine. He bought in October of 2021. We got him an FHA loan. But 2 years prior to that, he was just out of bankruptcy. He says, Bill, I can't buy a house. I said, absolutely, you can buy a house. And I think this is a really good time to buy a house. But Bill, there's multiple offers going around. It's a red hot market. He made sacrifices. He saved. He cut unnecessary expenses. He was spending money on his video equipment, eating out, events. He was nervous. People told him he was absolutely crazy. You just came out of bankruptcy. What are you doing? Why are you doing this? But guess what? Today, he made that back in 2021, he made the purchase, and now he's sitting on $75,000 of equity. Is he crazy? He's not crazy. He's free. He's free from rent increases, free from someone else's rules, free from missing out again. This is not 2020. This is actually better than 2020. During COVID, buyers were paying above appraised value. They were having to pay over what the sale price was, sometimes $20,000 to $30,000 over what the appraised value was. Extra money that they had to come out in addition to the down payment and in addition to the closing costs. So, and they still gained in that time period over $100,000 in equity. Were they crazy doing it? A lot of naysayers were saying, man, you're nuts buying in this market, paying over appraised value. The home's not worth that much. It's going to crash. It's going to crash. We're not in a crash, and values continue to go up. So right now, believe it or not, homes are selling below appraised value. You don't have to come in with it, and you get instant equity by paying below appraised value as opposed to buying above appraised value. So sellers are handing out tens of thousands of dollars in concessions, lowering sale prices, paying for 2-1 buy downs to get you a lower rate, and you can lock in your home now and refinance later when the rates fall. And they will fall. They go up and down. And when the timing is right and it makes sense, you get a lower mortgage payment. Can rent go lower? Absolutely not. Taxes generally go up, and the renters or the landlords pass that increase to the renters. So if you can't tell, don't let the train leave the station without you. Every buyer who said, I'll wait in 2021, they regret it. Every buyer who said, I'll wait in 2023, guess what? That was a bad market too. They regret it because it's gone up. Values have gone up. And if you're waiting now, you're about to miss that train again. You don't need perfect timing. You need a smart plan. You need to become educated, understand the data, understand what's going on. It's not about timing the market and getting it right and buying at the low point, being a sharpshooter. It's time in the market. Real estate is a long-term investment. It's a 5-year minimum, 10, 20. It depends on how long you will be in the home. But if you have time in the market, you will make out. But you have to get in to have any kind of benefit. So buy now, lock in your home, use the seller's money, then refinance later and lower your payment. The train is boarding now. The window is closing. This is your moment. Don't miss it. And until next week, this is Gaylord out.